If anything is unclear, just ask me. Now, you can't include your commute miles. Yes, you commute for your business, but it's considered a commute. It was your choice to live far from your work, so you can't, it's not a business deduction. So don't deduct your commute miles. And also you can't eventually deduct the miles driven for personal use. Now, if you're using standard mileage, you can't add any of the operational costs. It's a substitute for actual expenses method. So you can't add your gas, your maintenance, your insurance, vehicle registration, depreciation, lease rent, whatever. Just forget about them. Now, you still can add the parking and tolls because they're not operational costs. And some people ask me if they can add the car washes. Well, I would say no, because they're not even business expenses. If you have a different opinion about this, if someone told you something different about this, you can share and then we can discuss, but most likely not, because you don't really have to wash your car to be able to drive it. So I wouldn't consider it a business expense. Maybe some operational, but with actual expenses method, if you need to keep it at some minimum cleanness level, but definitely not to be used with standard mileage method. So let's open the fees and taxes page, and you can see tolls, airport fees, and surcharges. I'm gonna circle them for you. 397, you can round it to 398. Forget about fuel charges. You can't deduct them because you're using the standard mileage method. That's $1,923, and that's what I was saying, why you need to use the gross income, not the net deposits to your bank account. Now again, we're gonna get all the miles you drove in 2017, which was 50,338. And we're gonna multiply it by the standard mileage rate, which is 0.535. So we'll get a total of $26,930, much more than the $15,000 we got. Plus the parking, $398 parking expenses, you get $27,328 of total. So pretty generous, as I said. Now, very important, don't switch between methods. If you use the actual expenses method in 2016, you can't switch to standard mileage in 2017 or vice versa. That's mostly because the depreciation methods that allow you to take more advantages, depreciation during your first year. So you may use the actual expenses method during your first year of usage and then switch to standard mileage. So it's a little complicated, but just don't do it. So we're just gonna transfer on line 9, $27,329. So commissions and fees, this is also a big deduction. We're going to go on the sample yearly summary. So those are all your commissions and fees. You can deduct all of them. And we're just going to transfer the total to the line 10, 19,608. Now don't worry about contract labor, don't worry about depletion, don't worry about depreciation. As I said, it's a little too complicated and you most likely won't be using this. Don't worry about employee benefit programs. Insurance, this is not your car insurance and this is not your personal insurance. There's a place where you put your personal insurance if you're self-employed, but don't put it here. This is pretty much your liability insurance if you have any, and you most likely don't, because that's not the type of the business that has it. So most likely you'll leave it blank. If you have any questions, let me know. Now, interest. So this is very interesting. Now, for mortgage part, if you have a house mortgage, it's not about it. It's only about business mortgages. But when we're talking about other interest, now we said that with standard mileage, you can't add any other fees like costs such as gas or maintenance. But those were all operational costs. We didn't talk about financial costs. And in accounting, there is a clear distinction between the operational and financial costs. And the interest you pay for your car is considered a financial cost. And this is where it gets very interesting. There's an exception to standard mileage. Financial charges, financial costs can be included even if you're using the standard mileage method because they are not operational. This includes interest on your car loan, interest on your lease, and also if you use your credit card to put a down payment for your car, you can also deduct part of that interest. This may be a little more complicated. If you've done it, send me an email and then I'll do my best to help you. But in general, yeah, it's the car loan interest and the car or car lease interest that you'll be using for your deduction. Now, you can't, since you also use the car for yourself, you can't just deduct right off the entire interest. You have to allocate partially. And for this, you're going to use the same allocation rate. And that's one of the reasons I've shown you how to get the allocation rate. You're going to take the total interest you paid in 2017 or whatever year you're filing the return for, multiply by the allocation rate, again, you can go back in the video and see how we calculate the allocation rate, and you will get the deductible interest amount. Now, don't put it on the line 9. This is not a car and truck expense, as we said. This is a financial cost. And it's going to go on line 16, most likely point B, as interest. And let's take a look what actually we got for all your car expenses. So on the table, we got $26,930 of standard mileage, $1,733 of interest with $1,844 total interest paid and 94% allocation rate, and we also got $398 parking. So this is what we can transfer to our Schedule C. 27,329, line 9, and then 1,734 as an interest. There we go. That's what we're gonna do. 1,734, pretty easy. Now, legal and professional services. Usually, if you paid someone to prepare your tax return, or you talk to a lawyer about some legal matter, that's what you can include there on line 17. Let's assume $100 of tax preparation fee or whatever. Now, office expenses. Well, most important deduction would be your phone bill. Now, you can't deduct the entire amount because you also, just like your car, you also use your phone for yourself. So you have to allocate partially. It's very hard with the phone to really, there are no instructions how to calculate, like how to allocate your phone bill. I would say 50% would be a fair statement. So just divide by 2 the monthly payment for the phone, data plan. Other office expenses, maybe like pens, pencils, that kind of stuff. So let's assume $960 of phone bill in 2017, so half of it would be $480. So pension and profit sharing plans, forget them. Rent or lease, since you're using standard mileage, forget about this. Repairs and maintenance, same, you're using standard mileage, forget about this. Now with supplies, you could probably use some refreshers, some snacks you buy. That could be a supply. So let's assume $500. Keep the receipts, so that way you get the exact amount. Now, taxes and licenses, those are mostly business taxes or some kind of permit you need to get to operate in some region. So let's say $100. Now, travel, meals, and entertainment. For the meals, don't include your lunch. That's not what this is about. The only time you could actually deduct the meal or travel expense if you are far enough that you have to spend the night at that place. Let's say you have to go to Sacramento, it's reasonably far from your home. You can't come back the same day, so you have to stay there. And in this case, you could deduct the amount of the hotel and also half of the meal that night. But otherwise, if you are within the reasonable distance from your house, you can go and have your lunch at home. So this is not a business expense, at least to IRS's judgment. This is not a business expense. So this is it for the expenses. I'm just gonna do the math, and there we go. The tentative profit, $25,798. This is after all expenses. As you can see, standard mileage is pretty generous. Now, business use of home, don't touch this. Just because you made a couple of business calls from your home, it doesn't mean you've used it for a business. It only applies if part of your home is completely isolated, not used for living, but is used for business only. That's the only time you can deduct the business use of home. So we're just gonna leave it as 0. Now, net profit or loss, well, it's not gonna change much, so it's gonna be 25,798, and we can do the math. And before we're done with Schedule C, we just need to enter the vehicle information since we took the deduction. So when did you place the vehicle in service? Let's assume January 1st, 2017, or whatever date you started. If you don't know the exact date, try to be as close as possible. So the business mileage, 50,338. We went over this, pretty easy. Commuting, let's say 2,000 miles for commute, and then 1,000 miles for other reasons like grocery shopping or whatever. And then, was your vehicle available for personal use during duty off hours? Yes, it was. Did you have another vehicle? Let's say she didn't, so we're gonna say no. And then, do you have evidence to support your deduction? Yes, you do. And is the evidence written? Yes, it is. This is all you have to do with Schedule C. Don't worry about other expenses. Don't worry about cost of goods sold. So done with this form, and it's gonna take us to the form 1040, and it's gonna transfer all your business income to the line 22. So as you can see, yeah, it's done all the math for us. Now on line 42, the exemptions, $4,050, that's the amount she only could exempt herself. When you're self-employed, actually when you work for someone, your employer figures out your Social Security and Medicare taxes for you. But when you're self-employed, you have to pay a self-employment tax, and there is a separate form for that. And it's called Schedule SE. I'm gonna add forms, Schedule SE. Now, most of the work is done for us, and it's very self-explanatory. It just tells you which numbers to take, what to multiply it by. It's just gonna ask us for the net business profit. It was $25,798, and then do the math. It's done for us, so it's $36.45, the self-employment tax, but half of it can be actually deducted from your income. That's just the way it works. You can deduct half of your self-employment tax from your income. I'll show you how to do this. We're just gonna save this form, and then we're gonna go back to our 1040. Okay, so as you see on line 27, deductible part of self-employment tax attached Schedule SE, so $1,823. Also, we're talking about the insurance, self-employment health deduction. It's not as easy, but generally if you're self-employed and you're not in anyone else's insurance plan, you can deduct the premiums you paid for your insurance throughout the year. So let's assume it's $2,000. If you have any questions about this, send me an email. I'll do my best to answer. Now, line 40, standard or itemized deductions. In general, for most of the people, standard deduction is generous enough. It's $6,350 for singles and $12,700 for married filing jointly. Unless you had house mortgage interest, you had huge medical bills, you don't want to use the itemized deduction, and I'm not going to cover that because most likely this is what you will use. $6,350. This is another deduction from your income, which brings your taxable income down to $11,575. Now, the worst part, the tax. To figure this out, we're going to need the tax table. I'm just going to make a PDF so I can just show you. Now, this is pretty easy. You're going to find your filing status. Let's say it was single, and then you're going to find your income bracket. So let's start with the filing status. So it was single. I am going to circle this for you. So we're going to draw a line down to her income bracket, which was about 11,000 something. See, so income was 11,575. Tax table will be 1,270. I'm gonna hit do the math, and it's gonna come up with the total tax the taxpayer owes. It's 4,915. So it's the tax on the it's the income tax plus the self-employment tax. Now you can either e-file this. It's gonna ask you some questions, some identity questions, and then you can answer them, and then it will prompt you to e-file. Or you can print the form and mail it to the Internal Revenue Service. If you decide to print the form and mail it, you have to attach a payment. And the way you do this, there's a payment voucher. It's called 1040V. Add forms. Gonna go add a form. 1040V payment voucher. So most of the information is pre-filled for you. You may ask a question why the tax owed is not there, why we have to hand input this. It's simply because you don't have to pay the entire amount right away. You may sign up for installment payments. And those are the list of addresses depending on the state you live where you can mail the form. And as we can see, this is the entire form. It's ready. You just need to sign in the very bottom and you'll be good to go. This is it.